I'm sure you've come across Suzlon Energy and Inox Wind. These two stocks have become the darlings of Dalal Street, dishing out some serious multi-bagger returns for investors. So what's fueling this growth? Well, it's all about the growing push towards green energy, especially with India setting some ambitious targets in that direction. In this video, we'll discuss the increasing demand for green energy and just how fast it's growing. We'll be specifically zooming in on wind energy and all the potential it holds. Furthermore, we'll dissect the journeys of Suzlon and Inox, the major players in the wind energy sector, highlighting their triumphs, their challenges, and how they've evolved into multi-baggers. Let's begin. You're watching Informed Investor, initiated by Research and Ranking. India is a developing economy experiencing rapid economic growth, which means there's a lot of activity happening in industries, transportation, etc. Now, as a growing economy, India has a high demand for power. In fact, we're actually the third largest energy consuming country in the world. Now, to meet this growing energy need, India faces the challenge of balancing energy security and climate change. Now, our country relies heavily on energy imports with more than 80% of our oil, around 50% of our gas, and 25% of our coal coming from other countries. Now, this dependency costs us a lot of money and poses risk to our energy security. Additionally, using coal as an energy source significantly contributes to carbon emissions. In 2021, India was the third largest emitter of carbon dioxide globally. Now, the key to solving this problem lies in renewable energy, which is central to India's strategy for the future. Now, replacing coal plants with renewable sources is environmentally and economically beneficial. We're focusing on expanding our capacity in wind, solar, hydro energy, and biofuels. Over the past decade, we've also seen a substantial increase in the contribution of renewable energy to our total installed capacity. In fiscal year 16, renewables accounted for 29% of our energy mix. By fiscal year 24, this has soared to 43.1%. Now, globally, the trend towards renewable energy is also growing. In 2023, we witnessed a remarkable surge in global renewable energy capacity. The world added nearly 50% more capacity compared to the previous year, reaching an impressive total of almost 510 gigawatts. Now, this growth rate represents the fastest seen in the past 2 decades, marking the 22nd consecutive year of record-setting renewable capacity additions. Now, looking ahead, the International Energy Agency also offers optimistic projections. They think that by 2030, global renewable energy capacity could reach 7,300 gigawatts, a significant increase from current levels. Now, even in the IEA's most conservative scenario, they expect nearly 3,700 gigawatts of new renewable capacity to be added over the next 5 years. Now, this represents a substantial increase compared to the previous 5 years, and notably, solar and wind energy are expected to account for a vast majority of this growth, accounting 95% of the total expanded capacity. Now, coming to India. To address our energy needs and fight climate change, India has set ambitious goals, that is achieving net zero carbon emissions by 2070 and meeting 50% of our power needs from renewable sources by 2030. Now, according to the latest data, we have been making some solid progress. As discussed, about 43.1% of our total installed capacity comes from non-fossil based sources. These sources include solar, wind, large and small hydro, and biomass. Currently, solar power leads our non-fossil energy segment, contributing 18.5%, followed by large hydro at 10.6% and wind power at 10.4%. However, do note that large hydropower projects can have significant ecological impacts, so the government may focus more on harnessing wind and solar energy. Now, installed renewable power generation capacity has increased at a fast pace over the past few years, posting a CAGR of 10% between fiscal year 16 and fiscal year 24. India has 190 gigawatts of renewable energy capacity in fiscal year 24. Our government now plans to increase this capacity to 500 gigawatts by 2030. This would mean more than doubling our installed capacity from fiscal year 24, making us the world's third largest market for renewables. So, of course, opportunities are plenty for us in the renewable energy space. Now, let's zoom in on wind energy. As the demand for clean and sustainable energy grows, wind power stands out for its ability to generate electricity without emitting greenhouse gases. Now, wind turbines convert kinetic energy from wind into mechanical power, which is then converted into electricity. This makes wind energy a key player in the global transition to a low-carbon economy. In fiscal year 24, India has made a significant leap in wind energy by installing 3.25 gigawatts of new capacity, a 43% increase from the 2.7 gigawatts added in 2022. Now, this brought our total wind capacity to 45.9 gigawatts. Right now, wind power makes up about 10% of India's total installed capacity and a substantial 25% of our overall renewable capacity. While wind energy still plays a relatively small role in our overall electricity generation, it is important to note that India has the world's fourth highest installed wind power capacity. Now, we are also aiming to significantly boost this capacity over the next decade. As we discussed before, India set an ambitious target of achieving 500 gigawatts of renewable energy by 2030, with a substantial portion, which is 140 gigawatts, expected to come from wind power. While the wind energy potential is good, the yearly growth in wind energy has always been pretty inconsistent in India. Let's discuss this. A lot of this inconsistency has to do with government policy and later the COVID-19 pandemic. For example, in fiscal year 11, we added about 3 gigawatts of wind energy, but in 2013, that number dropped to 1.7 gigawatts. This was because the government stopped offering certain incentives that made wind energy projects more attractive. And when they brought some incentives back in 2014, the numbers again went up to 2 gigawatts. Now, in fiscal year 16 and fiscal year 17, things look better with an average of 4.4 gigawatts being added each year. However, new policies like reverse auctions were introduced, which slowed down the industry yet again. Now, reverse auctions can drive down prices but might lead to too much competition, making it hard for companies to sustain their projects. Then the COVID-19 pandemic hit, making it even harder to add new wind energy projects. Now, to help the wind energy sector recover, the government then made some changes. In January 2023, they discontinued reverse bidding and moved to a single-stage dual envelope bidding system. Now, this new system aimed to balance competition with the need for high-quality, sustainable projects by first ensuring that only technically sound proposals move forward to the price bidding stage. Now, this has led to a strong pickup in the wind addition. Now, the long-term prospects for India's wind industry look strong as we transition to competitive, low-carbon technologies that promote sustainable growth and a cleaner and a greener future. As a result, many companies are now stepping up their efforts to contribute to a more sustainable planet. Several Indian companies are also leading the way with green energy initiatives. Now, two of those companies are Suzlon and Inox. In the last year, stocks of Suzlon Wind and Suzlon Energy have become the street's favorites. Both these stocks reported a staggering 400% growth amid steadily growing bullish sentiment towards renewable energy. However, these companies had their own shares of ups and downs, especially Suzlon. Let's discuss this. Now, Suzlon Energy is involved in designing, developing and manufacturing wind turbine generators. Once a trailblazer in the wind energy industry, it became notorious for eroding investor wealth. However, recent developments have led to a significant turnaround for the company. Suzlon history resembles a roller coaster marked by significant highs and lows influenced by both internal decisions and external pressures. Let's discuss this. Now, a major issue for Suzlon has been its heavy reliance on debt. The company amassed substantial debt to fund its operations and acquisition. From fiscal year 4 to fiscal year 8, Suzlon embarked on an aggressive expansion, raising funds, increasing capacity and entering international markets like the China and the US. Now, during this period, it acquired Hansen Transmission and Senvion, both financed through debt. Consequently, Suzlon's debt skyrocketed from Rs 2.4 billion to Rs 100 billion by fiscal year 8. And it didn't stop there for Suzlon. The global financial crisis aggravated these challenges as the wind energy market contracted both domestically and globally. Suzlon's business suffered, leading to losses and loan defaults. By fiscal year 15, the company's debt had ballooned to a massive Rs 178 billion. In response, Suzlon exited its international ventures, focusing on the domestic market and divested non-core assets, including Senvion. Now, these strategic moves helped reduce the debt to Rs 111 billion by fiscal year 17. Now, refocusing on domestic markets and core operations, Suzlon launched innovative products and captured a large market share. By fiscal year 17, the company reported an EBITDA of Rs 22 billion and a PAT of Rs 5.6 billion. However, just as the recovery seemed imminent, India shifted from a feed-in tariff regime to a reverse bidding mechanism for wind projects. Now, this change led to aggressive bidding, project delays, and a slowdown in the domestic wind market, causing Suzlon to report losses from fiscal year 18 to fiscal year 22. Now, to address these challenges, Suzlon underwent debt restructuring, converting a significant portion of its debt into equity, reducing it to around 63 billion rupees in fiscal year 22 and approximately rupees 19 billion in fiscal year 23. The recent policy changes in India have provided a much-needed boost to Suzlon. The government scrapped the reverse auctions and introduced wind-specific renewable purchase obligations, and they also plan to auction 10 gigawatts of wind projects annually compared to the previous average of 2.9 gigawatts per annum. Now, these changes have revitalized the industry, and Suzlon, which is the largest player, is a natural beneficiary of this. Suzlon now holds a substantial 32% market share in the wind energy segment. The company has also secured significant orders. In fiscal year 24, it announced its largest ever order book at 3.3 gigawatt. To conclude, with favorable industry trends and robust government support for renewable energy, Suzlon appears to have overcome its financial challenges and is poised to a fresh start. The recent positive developments have significantly contributed to the stock's impressive performance. The next company we'll talk about is Inox Wind, which has established itself as a key player in India's wind energy sector. Now, Inox Wind Limited is part of the Inox GFL group, a group with a legacy of over 90 years in India. Now, incorporated in 2009, Inox Wind has been engaged in manufacturing and selling wind turbine generators and providing engineering, procurement, and commissioning services. Additionally, it also offers operations and maintenance services. Now, just like Suzlon, policy tweaks and the COVID-19 pandemic also impacted the company. Inox saw a substantial spike in debt from fiscal year 17 to fiscal year 23. However, the company has been deleveraging and its net debt had reduced to approximately 6.5 billion rupees by the end of fiscal year 24. Now, Inox Wind has also been benefited from improvements in industry prospects. Inox Wind secured a robust order inflow of 2.3 gigawatts in fiscal year 24. Now, this significant inflow has boosted their order book to 2.7 gigawatts as of March 2024, up from 1.5 gigawatts in fiscal year 23. Now, this high order book does provide solid revenue visibility for the next few years. Moreover, fiscal year 24 has been a turnaround year for the company. While the company still ended in losses for the full year, the 4 quarters of fiscal year 24 does paint an interesting picture for the future. In quarter 1, the company turned EBITDA positive. In quarter 2, the company witnessed cash profits. And in quarter 3, the company posted profits after more than 12 quarters of losses. Now, with these developments, the company expects future quarters to see a growth in their profitability. Now, moving on to the stock performance. Inox Wind has given impressive returns over the last 6 months with a growth of 120%. Over the past year, it has witnessed more than 400% returns, providing investors with multi-bagger returns. If you're interested in the wind energy space, here are a few points you need to watch out for. Now, based on the data we shared, it's no secret that the renewable energy space is growing. Factors like decarbonization, energy security concerns drove global renewable energy capacity additions by 50% year over year in calendar year 23. In India, renewable energy capacity has grown by more than 100 gigawatts over the last decade, reaching 190 gigawatts by fiscal year 24. Now, this is expected to rise to 500 gigawatts by 2030, so we have plenty of opportunities in this space. We've seen a lot of government interventions and frequent policy changes over the past decade. This caused a steep fall in wind capacity additions in India. However, recent favorable policy changes have turned things around. But recently, there were some reports stating that the government brought back the reverse auction, which led to a drop in the stock prices of both Suzlon and Inox Wind. Now, since this is a highly regulated space, it's important to keep an eye on any policy changes. Now, considering the decarbonization targets, we do expect the government to be mindful of their policy initiatives. Now, the wind energy sector has been hit by low volumes, resulting in less competition. Currently, only Suzlon and Inox Wind are executing concept to commissioning projects among large manufacturers. Suzlon now holds a market share of 32%, while Inox Wind holds 15%. Now, both Suzlon and Inox Wind seem to have overcome their financial challenges and are poised to a fresh start. Recent positive developments have significantly boosted their stock performance. Now, despite these improvements, it's important to keep an eye on valuations to ensure that the stock remains attractive investments based on their financial health and market prospects. Having said that, this was our attempt to educate you on the wind energy sector and the potential it holds. Please note that this video is for educational purposes and does not constitute investment advice. With that, this is me, Merlizana, signing off. Take care.
Investments in securities market are subject to market risks. Read all the related documents carefully before investing.